Morning. There's my favorite chameleon, Dimitri Pargamanik. How you doing, Dima?
Good morning, Will. How are you?
Great. You want to go right to the disclaimer?
Yep. So good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not registered investment advisors. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, call your broker. That's what they're there for, to help answer your questions and provide you with guidance. There's a disclaimer.
Excellent.
Yep.
So before we get started, a couple things. We have a webinar with Jake at 10 a.m. this morning. I will put that in the link. Also in the link is a link to the Zoom meeting that's going on right now. So D, if we have any questions, do you want them to click over to that Zoom meeting? And
yeah, definitely. If you guys have any questions, there are two ways to do it. Either put it in the live chat. Will's monitoring that. He'll read them back to me. Or there's a link there on that live chat Will's putting out that will, if you click on it, it'll take you over to Zoom. If you raise your hand, we could then hear your question. You don't have to turn on your video camera, but this way you could ask the question. Everybody could hear it. So those are the two ways you could ask a question.
Excellent.
Right. So with that, I think that we could get started. And I think what we'll do today is we'll take a look at the pre-market report. I'm going to take a look at Facebook. That's what we're talking about. For a particular reason, I wanted to just talk about Facebook, kind of like what's going on, and kind of to answer some questions about, trade ideas and research. So I'm going to just kind of point some things out using Facebook as an example. And of course, well, if you have any questions, just stop me and let me know, what people are asking. So let me share my screen. What we'll do is we'll start out with the pre-market report, quickly just take a look at that, and then we'll move on. So these are stocks that are trading in the pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. I'm coming down here. I see 52 made our percentage gainers list, 75 on the percentage decliners. So kind of a mixed bag, but more lean towards a more bearish bias at the open. Let's take a look at the higher market cap stocks. So I'm going to use this filter here, market cap 20 billion or higher. So these are stocks with market cap 20 billion or higher. 11 made our percentage gainers list, 18 on the percentage decliners list. So the list relatively small, not very big, kind of a mixed bag, but slightly more bearish at the open right now, just given the 11 to 18. If no questions are popping in, Will, then I'm going to just kind of take a look at Facebook really quickly. Just start a discussion, and I'll tell you why I'm using kind of Facebook as an example. And
perfect.
So one of the things, kind of wanted to point out for people to realize, because some people will, look at research as you're looking at something and you have to react right away, right? And this is like the biggest mistake, where people think that, that the way to trade is that you're looking at something in real time and you have to react to something in real time, and you're trying to immediately capture some kind of a profit, right? So you're immediately capturing profit, within seconds or minutes, and that's not really how trading works. There's, unless maybe you're a market maker and you're streaming, out there real time, but in general, that's not how it works. And sometimes for a trade idea to develop, you're developing a thesis over time, right? So not only are you looking at, you're studying the markets and you're studying the data and you're looking for opportunities, but there are other things that things might develop and take time. And you're creating a thesis and notes and which way you want to lean. And I'll give you an example, like in a 2000, when 2008 hit, right? When 2008 crisis hit, you had a lot of time to read those headline news and see what's going on, and kind of, people say they were surprised, but if you were paying attention and reading the news, you shouldn't have been surprised, because, for for over a year, you could read headlines where people are buying real estate, with no, what did they call it? No
No money
doc
down
loans,
or no doc loans.
no doc loans, interest only, people, that, people who are just getting out of college own 5 homes. Like, this was all being reported and written. These were like headline news, right? You didn't even need to go really deep into it. And sometimes there's a delayed reaction to the problem as well, because if you're paying attention and kind of reading, there's a delayed reaction. People were talking about like, hey, these banks, people were, it was in the news, if you could read the Wall Street Journal, Bloomberg, whatever, they're all kind of telling you like, hey, there's a problem here. And the market's sometimes ignored for a long time, and you have to kind of assess, is this a real problem, a systemic problem? Is this a long-term problem? Like, which way, which way do I lean? How does it develop? And sometimes I remember Fannie Mae was consistently failing to comply with their financial state. They could not, when you're a public company, you have to file financial statements with the SEC, right, every quarter. They couldn't even comply with that for a long time. They're like, well, we don't know what's going on. They're too afraid to even file something because they didn't understand their own books. It was a flashing warning sign, but the stock kept going up, even against those headline news, because I remember 2 hedge funds, and I remember this specifically because I was on the other side of it, where 2 hedge funds just kept pushing that stock up, claiming, that, well, this is the most undervalued, book, and they were ignoring everything else. And, sometimes you got to kind of start developing your thesis, and it may take time for it to kind of evolve. And I'll give you, an example of like, now Facebook kind of came up on my radar, right? So why did Facebook come up on my radar? And not that I haven't done any, and I'm not telling anybody to go, remember, I'm sharing ideas. I'm not telling anybody to go establish any type of position. And usually, Facebook is a kind of company I do not like to bet against, because you got the original founder there who's very innovative. It's the company is very innovative. So it's usually the type of company I do not like to go against. But then, as information comes in, I have to take all this stuff into account. And here's like some of the things that develop that, you start making mental notes, and you're putting a thesis together, maybe for a future trade. Okay. So one of the things I look at, in Facebook is like, okay, what is its business model? How did they make money? And is there a danger to that business model in the long term? Right. So, and we know that Facebook's business model is kind of targeted digital ads, right? So what their real value proposition, their real money maker is that they have the ability to take data and information on each individual, and by having that information, they kind of can target ads, right? So for example, like, MarketChameleon, if we wanted to put an ad out, for us, it's more valuable to put an ad out to somebody who's more likely to be interested in our product, right? An options trader. There's no real value for us to put out an ad and have it displayed to somebody who's not interested in options, or like a 16-year-old kid looking for, there's no value to that. It's kind of like wasteful, right? So their ability is to be able to display targeted ads to a person most likely to be interested in your service or your product. And for a long time, this has kind of been, and they haven't seen any kind of challenges to this business model, right? So then you start kind of reading the headlines and saying, hey, well, something's starting to change about these tracking devices, right? These tracking devices are now not only, they're under scrutiny by both sides of, you know, both sides of the political aisle, by not only the lawmakers, but even in general, the public, right? Like you're starting to see people backlashes against these tracking devices and how they track people. And we've already started to see movement in that direction. Apple now changed their policies where they're not going to just allow you to use that information and data that they're tracking on your device. You have to give them permission. This, and you're starting to see changes in the industry. This is before which I feel there's going to be a regulation on that. I think that you're seeing Google make changes, Apple starting to make changes the way that you're tracking people. And this is going to be challenging to that business model, because all of a sudden, your ability to be able to track a person and see what they like so you could service them those targeted ads will become more expensive, and maybe even have a lot of challenges that they don't see right now. And we're kind of starting to see some of those effects on their, it's being reported, but kind of not being taken that seriously yet, because the viewpoint is, well, Facebook's very smart. They have smart people. They're going to get around this problem. But even if they do, it's not, remember that the one thing I'm keeping in mind is it's not, if you're getting around it, but you're still tracking, it's that ability to track that's coming under pressure. So that's number one. So I look at their, where are they generating their income from, if that's coming, if that's, if there's pressure there or danger to that, which I think that there kind of is. And the other thing is that, what about their costs? So, Facebook's costs, they don't really have any like regulatory costs. They're like kind of self-regulated. But if you're reading the headlines, you're saying that Facebook is hiring 40,000 people, whatever, to monitor the content, right? To monitor the safety. And this is before regulation even hits, which I think it's coming. I think it's inevitable. It's coming not only in America, I think it's going to be coming from around the world. And that cost, that regulatory cost is going to be permanent. And remember, these are costs coming down this cost that we're talking about is where they're going to have to use resources on non-income generating processes, right? So these are things that they're going to put in place to monitor, which is vast, right? They have 1 billion customers. So it's not easy thing to track, right? When you have that many customers. If you have 1 customer, 2 customers, 3, that's a little bit easier than trying to police 1 billion people. And I think that's going to be, that cost is going to keep increasing and increasing and increasing, and it's not generating any income. It's just the ability for you to just, continue on the same model you've had. And another thing is that it's coming, and remember, all I'm doing is accumulating what are the headlines, like here's Wall Street Journal today, Facebook whistleblower, blah. You have people disgruntled who worked there, coming out there. She's going to be testifying, she's out there in the media. She's not the only one, out there. People who've worked for Facebook are saying not such good things. And I'm not saying anything bad about Facebook. I use it. I think it's a good service. I think it's an innovative company. It's just that I'm looking at it from the perspective of what I'm seeing in front of me, the information, and why are these risks not starting to be priced in? Why is there such a delayed reaction when I see this day after day after day?
Well,
right?
Also, what's interesting is that whistleblower was actually hired to make the site a safer site.
Yeah.
And she actually became, because they weren't listening. What she says is the leadership at Facebook was not listening at all.
Yeah, and I think the argument that's starting to be developed is that their service, is harmful to people, right? Like that, it's not just that their model is harmful to people. It's harmful to you know certain individuals. It's harmful to children. It's harmful to and and that's a dangerous spot to be in, right? Like when you're saying you're actually your actual service is harmful to people. Um, and I'm not even mentioning other competition that's coming in to Facebook like TikTok and Snap, that are going to start competing for those ad dollars. But there's certain things here that I'm looking at and I'm like, I know Facebook, it's FANG stock, one of the best performing, very profitable, but I can't ignore, these headlines that are coming out that are unusual and they're not very easily fixable, right? There's no quick fix to this. What are they going to do when their core business is being attacked this way? And so far, we haven't seen. By the way, not only like, okay, you got customers on one side, you got regulators unhappy, you got employees out there, taking risks, whistleblowing. Then you've got also investors suing Facebook, saying that Facebook, you got a big lawsuit right now from the investment side. Go read the headlines where they think that they paid a fine to prevent themselves from being liable and blah blah blah. So I'm looking at it and going, okay, I am seeing some, here's the trading stats, so I'm seeing some indication that it's starting to weigh in on the stock. Last 3 months, here's what the S&P 500 did, up 1.2%. Facebook's down 3%. So there is the beginnings of some doubt. There are beginnings of like, hold on a second here. What's going on? I got issues on the revenue side. I got issues on the cost side, on the liability side, and I'm kind of watching it here and saying, well, why is, there's no particular fear priced into the options, certainly not more than the market itself. Maybe there's a delayed reaction, and this could last a while. Like, when does it break? Do they resolve this stuff? When does it break? But I think the point I'm trying to make here is that certain thesis, long or short, might take time to develop, and it's your assessment of the information coming in. It doesn't necessarily have to be from a particular trade you saw. It could be from, you'd have to also take in the news, consume the news, and say, well, what's going on here? How's this going to impact the stock? Is Facebook just going to go up because it's Facebook, or are these problems that they're going to deal with? And, if I like the model of digital ads, maybe is Google a better alternative, or are they seeing the same issues? But these are like things that you have to start asking yourself and developing. And sometimes this trade could, until you feel more confident, if you're seeing something building up and following that story. That's how they did it on The Big Short. Remember that for a long time they were reading those headline news, and it was even going against them. Anybody see right? If you saw the movie The Big Short, they were sitting on losses, but they were so convinced in their evaluation of the data, they stayed in.
Not only that, you weren't able to withdraw from the fund. He changed the structure of the fund to keep
so
locked in.
Exactly, the investors in the fund were already had enough and said, you're wrong. Your evaluation of the data is incorrect. I want to withdraw. And what he did was, but he was so convinced, right? He's looking at the data, he's seen the picture. He's like, no, I'm not. The market is wrong. And what he did was, what did he do? Just he changed the rules where you cannot withdraw money from the fund, right? He just said, you're locked up. I'm locking you in because you could watch the movie, but it was very interesting because he thinks that this was a big, fraud, basically, and he bet against it. So I think that the point I'm trying to make today is I see too many people kind of jumping in and so eager to put on a trade so eager because they think they need to create an execution, and they skip the whole research process, the assessment. And I'm not saying, like, look, Facebook can get out, I'm just following this news, but the more that piles up that's negative without positives, it's going to start making me want to lean one way, maybe on rallies. I'm going to start watching it, but I don't think any stock is immune, right? Is completely immune to, bad news or bear market, or you're going to see challenges, right? Especially when you've got, things challenge to your reputation. This isn't good, when you're seeing this kind of stuff, that now you got to go defend it. The challenges to your business model, which that people think it's outright harmful. Challenges, you got your costs potentially going up. I don't see how their costs are going to come down to continue to do business. This is just going to create another reason for them to, hire more people to try to monitor. And I think it's just an impossible feat, right? Because their model is based on an algorithm, right? It's not a human being able to read stuff and say, like, like somebody's saying something harmful to kids, somebody's saying harmful, like, an algorithm can do so much. And to be able to hire people to read every post that person puts on there is impossible, so I'm not sure how that's gonna, work itself out. What do you think?
Well, I think the one thing, and it's led to an interesting discussion on the chat, but Chuck was mentioning that he loves Facebook, right? And that's the thing, is the amount of money Facebook makes could be shrunk. I mean, Facebook isn't going anywhere, right? Just the way Facebook makes money and the costs involved with operating Facebook could dynamically change, right? So what looks like an interest in P for tech stock now at 25 could be, the cost could, go up, so significant that it, affects the stock price.
And their ability to generate, right?
Generate revenue.
To generate revenues could go up because it's a great product. But what my point is, that are they going to perceive Facebook services as harmful to society? Like cigarette smoking is harmful to society. They're still in business and stuff, but how much can they grow, right? That are we going to see regulation and taxes on it? And are they going to be forced to pay for content? Some places in the world are starting to do that and say, hey, you're using other people's content, you might have to pay them. So not so much that they definitely work, right? The service works. It gets you addicted, it gets you hooked, just like cigarettes. You're hooked, you're addicted. It works. But how, going forward, how are they going to be able to still generate those massive margins, or is that going to come under pressure, right? That's kind of the question. Is that going to come under pressure? Are they going to be able to look, this is, I think, what they're facing is they ballooned to this very successful company, right? People are looking at them as a potential harmful, harmful to society, right? And how do you get around that? Like if you're selling a product that the consensus is, from regulators or investors or people working for you, that, hey, what you're doing is having a negative impact, and if the changes you make, how does that impact your service? So that's what I'm saying. And it could be, well, it could go either way. I'm just showing you, as I'm taking in this information, right? Because eventually, the more headline news that are negative and they keep piling up and piling up and piling up, what are investors going to do? Are they going to keep putting money more money in, more money, more money in, or are they going to exit and say, I'm going to wait this out? You know, if I could get a near its all-time high, am I going to exit, put my money somewhere else and wait this out? That's the question that you have to ask. So, and I know that people are going to disagree with me, and that's okay. I think obviously some of the best investors out there are going to be disagreeing with me, but that's just my assessment, my take on what's coming out.
No, it's super interesting. And there are a lot of industries like that, right? You look at like the explosion in the online sports bookmaking and, is very hurtful. Gambling is super hurtful for people and leads to loss of, families. And, it's as addictive as anything. And you look at
draft, and it's regulated.
Yeah.
Right. And that's why it's regulated, right? That's why you got then rules in place. You got regulators coming in, checking your books, checking your, and that coming, is that coming to this industry, and how will that impact your profit margins, impact your growth potential, your innovation? We don't know that yet, but there's that uncertainty right now that's growing that we haven't seen it. 3-4 years ago, we weren't talking about it as much as we are today.
Yeah, it's really interesting. And it also means, how do other people get into the space, right? It's almost a barrier of entry where maybe it's bullish for Facebook, in that they'll have a barrier to entry to small company startups trying to get involved. How are small startups going to have the same ability to regulate themselves in the advertising?
Too. But I think in Facebook's situation, it could be a negative if they're perceived as there's no competition. So the less competition in the space, at least to me, I think Facebook doesn't want to be a company that's considered to be a monopoly with no competition, because you've already seen that where they go out of their way saying, well, no, we have competition, we're not a monopoly. There's Twitter and TikTok and Snapchat. So I don't think they want to be perceived as that, because then they face a risk of being broken up, right? That's the other risk. So these are risks in place that to be aware of. These are things that you want to, over time, start to consume data and information. Say, is it overwhelmingly positive, overwhelmingly negative, and why am I consistently seeing things in the news about this? Because eventually there's so much negative stories you could take until people start exiting. You're right. It takes the first real whale to start exiting before everybody else. But there's so much you could take before you're like, you know what? I don't want to hold on to this risks anymore. I'm tired of reading negative news or negative, I'm going to wait this out. So that's kind of like maybe where we are. I don't think so far, maybe we're not there yet completely, and it might take longer and the news could change, but certainly it doesn't. If you've been following it, we've been seeing that negative news kind of for a while now. To go back and start looking at those, you got lawsuits from investors going on, from users. You got around the world now, you got people questioning the tracking devices they're using, the data that they're collecting. And it's just kind of like the beginning.
Very good points, Dima. I mean, it would be interesting to hear your thoughts on these Chinese stocks too. I mean, how does delisting of them on U.S. markets affect the stock price here?
Yeah, exactly. Like that's another thing you're starting to read and saying, well, how does this play out? Is it more bullish? Is it more bearish? Is it neutral? How do these things play out, and how are things developing over time, right? So if over time you're starting to see, things getting deteriorating worse and worse and worse, and the markets are not reacting, eventually something will give, So anyway, these are just my opinions,
And the community, Chameleon community
and
loves these opinions.
And you could
lots of great chat, D. Awesome job, buddy.
And the painful thing is, like, you could be when we worked for somebody, you know, who I respect, one guy he told me, my ex-boss, he said, Dimitri, if you think that like say the market's overvalued, right? If you think the market's overvalued and you want to short it, you're probably have to wait another 20 to 30% before you should do it, you know, because that's how it will still roll you over before you're right. And maybe I'm wrong on this. I don't know. Look, the information is changing, right? So tomorrow's information could be different than today's, but that's what I'm just looking at.
Yeah, and again, then you want to start looking for trades with what we talk about, right? Like high win rates, edge, you know, trades small percentage of your portfolio. You know, you're
Yeah.
not going all in on a short on Facebook if that's the opinion you
No,
have,
no, 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 no.
and certainly a long, right? Any long that's showing up, you want to be super careful if you're putting on a long position in Facebook.
Yeah. So maybe, right, the idea is like, well, if I'm long the market, S&P 500, and Facebook goes up, I'm still going to do well, right? But if I think that Facebook is the one that is more in danger, you know, than others, then I have one short, one long. It's kind of like you don't definitely ever want to go all in on anything, you know, like that.
All right. Great stuff, D.
All right. Thanks everyone for joining. Hope to see you guys tomorrow. We've got another 10 o'clock, right?
Yeah.
With Jake.
Jake and I will be on at 10. He'll be talking about volatility, how he views volatility. It should be a great show. Thanks, D.
All right. Thanks everyone. Have a good day.